Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody.
Welcome to the show. I'm back.
I feel spring.
Well, you know what? With the
Today's
melting happening right now, it's a beautiful day today.
6 degrees out there.
Changing overnight, though.
Yes, sir.
Apparently minus 20 tonight and minus a high minus 15, and then warming up towards as we get into the week.
Might be a little freeze. I can tell you when I got off the plane, I was in Punta Cana for the last week. When I got off the plane, I was like, what is this? It was Wednesday, and it was freezing. So...
But that's why you went to Punta Cana.
That's why. Right? That is true. That is correct.
At least you weren't in Puerto Vallarta.
Yeah, that was
this weekend.
Although
I've got friends that are there, and they said it got blown out of proportion. It was kind of a couple of neighborhoods where the crowd isn't so friendly. There weren't as many tourists in those neighborhoods where the tourists really weren't impacted that much. But
still scary. I know.
Still scary when you see that.
One of Petra's good friends was actually in Puerto Vallarta and left just before that happened. Yeah. So it was still scary what's going on in the world. Everywhere around the world.
Thank you. I was going to say, it's not only about
it's everywhere in the
these
world.
Places.
Yeah.
Well, obviously the breaking news today with the U.S. and Israel doing some strikes in Iran.
Yep.
We were talking this morning before the show. There's definitely been some effect on the bond market.
It does. I mean, anytime that you've got some, world events that are happening that could create the markets to come downwards, and there's a little concern about what's going to happen with the stock markets on Monday now as a result of this. And obviously, we've seen the bond markets. The good news for anybody that's got a mortgage, we've seen the bond markets come down 35 basis points in the last month alone. So. Look for some better fixed rates. We're not quite there yet. The banks love to hold those back until they see that bond market stays low consistently. But we've seen enough of a drop that I truly believe that we'll see all mortgage rates hopefully in the threes within the next week or two on all terms, and discounted, that is, by the way. And with a little luck, if this continues, the bond markets continue to do what they're doing. Listen, a lot of the economic data, and we can talk about whatever we want as far as what the predictions are, and banks are predicting that Bank of Canada's next move is probably to go up. I don't agree. I think the economic data tells us a totally different story, and the economic data suggests that there's room for Bank of Canada to come down. I know that Paul's going to talk about what's happening in the real estate markets, not only in Ottawa, but across the country. But my feeling has always been, if the Bank of Canada's done enough, then house prices shouldn't be doing what they're doing across the country, nor should house sales.
It should stay flat.
It should stay flat at
the bare minimum.
But that's not what we're seeing. We're seeing huge declines in sales, some declines and some worse than others. Obviously, some cities are seeing double-digit drops percentage-wise in values. But so, in my opinion, Bank of Canada's got one or two rate drops left to try and get that market back up to par as opposed to letting it continue to slide.
It would be shocking. It would be shocking if they did an increase in March.
Well,
wouldn't it?
No way.
They can't.
Like, that's not happening.
They can't. Listen, our numbers come out. What are we today? The last day of February.
28th.
So by next show, we'll have the numbers that will be out. They should come out Tuesday or Wednesday. But, when we look at how things left at the end of January, and let's be honest, February was not much better. I mean, they're going to
shorter
be
month.
They're going to be very consistent with what? I mean, our number of sales were actually down 5.6 here in Ottawa at the end of January. But we were talking about this morning. You look at Toronto. Toronto had the lowest home sales in the last 25 years.
25 years?
They're for the first time, their average sale price is under $1 million in a long time. I believe it's a decade for that. They were down 19.3%. Vancouver was almost down 30% number of sales. Calgary was down almost 15%. Edmonton almost 28%. The only major market here in Canada that was actually up was Montreal. I mean, Montreal was up 7.7% number of sales. So it's listen, we talked this morning and said, listen, we're realists. Like, we're going to tell you exactly what's going on in the Ottawa market, also in the economy. But at the same time, it's not as dire as what people are saying. I mean, you look at the news and, the world's ending. The economy is getting killed. The market is dropping. People are losing their shirt. It's not that bad. I mean, we're not great, but we're also not that bad. I mean, our market, we're seeing this month. I mean, I think it was Dora was telling me that, here's how I think when I mentioned before, I said, You have to have your house looking amazing in this market. You have to be priced perfectly in this market, and you have to be listed with the strongest marketing team, agent, negotiator. And I know Dora was telling me this week that she had a couple of her properties go multiple offer, which was great to hear. Now, when she told me about the pricing strategy she used, I'm like, brilliant. I mean, that's a strong agent who priced it properly, who gave them the right information to make sure the home was looking absolutely perfect. And of course, you're listing with Dora and Paul Rushforth Real Estate, which is the strongest in the industry.
Of course, it's going to get done.
Of course, it's going to get done. But at the same time, she gave them the right strategy, and we had multiple offers. The problem in today's market...
But this isn't the same as COVID, so we're not talking about pricing $100,000 less and then getting bidding.
No.
What Dora's doing, she's probably saying, okay, like that home maybe in that neighborhood would have sold for $489. Let's list yours at $479, and kind of give people motivation to say that's a good deal.
Well, even $489. Right? I mean, there's a lot of people that let's say we go through the door and we say your home needs to be at $489. But you know what? Let's try $519. Like that is a non-negotiable. Like that's not happening.
You've just killed your deal right there.
You've killed your deal, and at $489, you might get $489. Maybe you'll get $495. Potentially, you'll get $500. If you list at $519, you're probably selling 6 months down the road for $465, $450.
So how do you respond to people that criticize realtors for air quote underpricing properties? Well,
I don't believe in underpricing properties, but I do believe in this market pricing it competitively and according to what the competition is out there. The problem being is sometimes in a solid, strong market, an agent might say, you know what, let's pop it up an extra $15,000 or $20,000.
We can try it.
We can try it and see what happens. And then, or the consumer and the client says, I would like to go higher. And if you're not a strong negotiator, you're like, okay, I'll follow whatever you say. But the best negotiators show the forensic evidence, say, here's where you need to be. If you have any chance of getting top dollar for your home, this is where you need to be. You need to follow my advice. This is what we do every day, all day. And the people that do that, their house is going to sell. The people that don't, you're definitely potentially not going to sell. We talked about last year, the number of homes that hit the market, only 51.5% actually sell. So
I was shocked by that statistic.
And that's actually strong. I've been in markets where it's like 41, 42, 43% of the homes actually sell. So 51.5 is actually not terrible, right?
But it doesn't sound great, right?
It doesn't.
To me, it doesn't sound great at all.
It feels like... Well, you and I both guessed in the 70s, didn't we?
Yeah, I figured it'd be in the 60s or 70s. Hey, let me ask you, Paul. So in this market, and I know during COVID we saw that people would price their homes crazy. I mean, it was all over the place during COVID. But now that we're in this market, so if a house is listed at $519 and all of a sudden your neighbor lists at $499 and it's a similar house, do you see the other agents saying, we better list it at $499, otherwise we're getting no? Or do people kind of hold firm and say, you know what, I'm going to keep it at $519?
Well, if you're at $519 and you're a similar home and someone hits the market at $499, you staying at $519 just sold your neighbor's home. That's what that does. Immediately sells your neighbor's home. But I even say now, so this is where pricing is very, very important, because if they're like, well, why don't we just try in this example, why don't we just try the $519? The problem with that is someone hits the market similar to you that's lower than you. You're
not getting any showings. Why would I come and see your house?
You've just killed your sale. Now, saying that, a lot of people will say, well, listen, I'm not going to drop the price of my home. We've had 7 showings in the last 8 days. And then my response to that is,
how many offers?
How many offers? But those people are showing your home because they're showing homes in the area, right? They're not really showing your home to see it. They're showing it saying, oh, that's overpriced. Let's go buy this home.
Right.
So pricing in this market, I've said it week after week after week. If you're not listing with the strongest agents and you're not pricing it correctly and you don't have your house ready to go, don't even put it on the market because it is not selling.
Well, it must be part of the pricing strategy is what the seller's situation is as well, which as a buyer on the outside, you can't know what that situation is. So in your example, Frank, that somebody listed $499, maybe they have to get out fast.
True. And that doesn't usually happen, but at the same time, we're in a market where you can't get greedy. We're not in COVID where we can just go for that home run. We're in a market that strategy matters. Strategy and pricing actually matter in this market. And I've said it before. I've been in this business now 21 years. This is the strongest market where strategy matters that I've ever been in.
Oh.
Which goes to show you you can't overprice and you can't list with the cheapest agent. You just can't.
No.
You've got to list with the best, and you have to be priced absolutely spot on.
And financing is that much tougher these days. So again, I mean, for somebody that's buying your house, they may have been pre-approved for a certain amount, and if you're overlisted by $20,000 and they can't qualify for that $20,000, well, now they're not even looking at your house anymore.
They can't.
So they just can't.
Frank,
So,
are you still? I'm still seeing this in write-ups, and I know this as a mortgage broker. You cringe when you read this.
as is?
Fixer-upper,
Oh, yeah.
as is, like investor's dream, could be a teardown. Like that basically just screams, I can't give you financing.
Goes up.
Yeah.
Well, red flag goes up. It doesn't necessarily mean that you're not going to get financing. What it means is that you're likely going to go through way more headaches to get the deal approved, which means could be an appraisal. We've had a couple of them, actually. I had a couple this year already where, the customers thought they were getting these great homes, and then the inspection happens, and halfway through, the inspector stops and says, whoa, stop, like back up here. You realize right now I can already count for $50,000 you got to put into this place, and like stop. So, again, lenders don't ask for home inspection reports unless there's comments like that on the
write-ups.
So on the write-ups, whether it's on the offer on the MLS feature sheet, if there's write-ups like that, then lenders have been known to say, you know what, we'll consider it as long as we get to look at the home inspection report that an accredited home inspector does. We're happy to consider it. But if we don't get that report, then the likelihood is that we're going to pass on this deal.
What about wet inspections for wood fireplaces? Do you have to see those as well?
No,
like what
not necessarily.
But you need to know if it passes or fails.
Yes, yeah.
If
The
it
lawyer,
fails,
that's one of the questions that happens to the lawyer, so it happens later on. But we need to know ahead of time, because otherwise the last thing we want is for it to get to the lawyer. Now, again, most people are going to pass on that anyway if it fails that wet inspection, or they have to fix it, whatever the problem is. So,
well, it's even tough with insurance, right? Like
of course it is.
It's a major red flag with insurance.
That's why I think insurance should be on every single purchase agreement. I still don't see it, which surprises me, though, how many offers I get that the insurance is not there. Again, on your typical brick-and-mortar home in a neighborhood, you don't need it. But if you're in the outskirts a little bit with septic and well, sometimes you need it.
All right. When we get back from the break, we'll head to the phones and talk to Ron. If you have a question before then, head over to realestateandmortgageshow.com or give us a call, 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody. Again, just a reminder, if you have a question and you're not able to call in, you can head over to realestateandmortgageshow.com and submit your question there. And in regards to that, we made an announcement a couple of weeks ago.
Yeah, it was exciting. We announced that myself, you, and Frank are starting a podcast. We're going to do a weekly podcast in addition to the radio show. And we also have, like right now, if you go to YouTube and go just search Real Estate and Mortgage Show, you'll see us on YouTube. You can subscribe. Not only do you see the radio show that we do every week there, but you're going to be able to get the early updates about what's happening with the podcast. We're aiming for sort of a late spring, maybe a May, somewhere like that, to start the podcast. The room is just in construction right now. But it's, we're excited. So if you go subscribe, if you go to YouTube, Real Estate and Mortgage Show, you'll be able to subscribe and hear all the updates about when the show's coming. So we're very excited by it. So it's going to be
very exciting.
2 hours of Frank and I and you.
And it'll be midweek, right? So which again works out well. Like you said earlier in the show, I mean, the statistics are likely coming out Monday, Tuesday as to what February was like, and then we don't have to wait till Saturday to talk about it. We could talk about it on the Wednesday, assuming that Wednesday is when we do the podcast. Same thing with Bank of Canada announcements.
Definitely, because those all come Wednesdays, right?
Yeah. Inflation numbers are usually on Tuesdays, so all of a sudden we're getting on top of some of the data that's coming out that impacts what happens with real estate and mortgages.
You know what I just realized is that we have to spend 2 days with Frank now.
It's all peaches and cream for me.
Well, because what I do is I usually start to mentally prepare myself on a Wednesday to know that I'm going to see him on Saturday. So I'm like, Wednesday I usually break out into hives. Thursday I start to feel better. Friday I panic because I have to see him, and the anxiety builds. And then Saturday I see him. As soon as the show's over, I'm like, whew, I'm done with Frank for another week.
Yet I get other realtors, competitors of yours, that love the program and say, Frank, thanks to you, Paul's become a little smarter.
All right.
And I said little. I didn't say a lot.
Little smarter. Yeah.
To the phones we go. We've got Ron on the line who has a question about mortgage delinquencies. Ron, welcome to the show.
Hello, lads. I was reading the Globe and Mail earlier this week, and they had delinquency rates. And then as you read in the article, it says 0.05. Regina was the highest.
Yeah.
What they didn't say is 99.5% of people pay their mortgages, plus those homes, most of them have 50% equity. So why do people write mortgage delinquency rate stories?
Well, I think it's a number that's important, and again, if you remember 20 years ago, 18 years ago in the U.S., I mean, their delinquencies were 30, 35%, and hence why you saw what the market do what it did down south. And, there was a lot of worry back then that was going to follow here in Canada, and yet nothing even came close to that. The one problem that I think we have in Canada, and listen, I think the fact that delinquencies are as low as they are is amazing. But I think the other part of the argument to this is that maybe we're a little bit too safe, and some of the banks and some of the rules are way too safe, because when delinquencies are that low, and Regina, again, being high on the 0.005, where most of the average across the country is 0.0026, so it's half of what Regina is, and Regina is very low. So, when we're talking about that low an amount of delinquencies in our industry, one of two things. Number one, we're happy because it's safe and our financial system is doing its job. But the other side of it is that this new stress test that got introduced in 2017 and is really limiting what the lenders can do has forced some Canadians to go into alternate financing, which is more expensive, when in reality they should be able to continue to stay in traditional financing. Right. So, that to me is a concern, and it's a concern for hardworking Canadians who now, through no fault of their own, are because of this introduction of this stress test. And again, if the stress test was to reduce what happened in the U.S., that's one thing. But the fact is that we are now, right now, we are at pre-COVID levels. Our delinquencies have now matched what they were pre-COVID. And keep in mind what we're going through. Now, I think they're going to go up a little bit this year because we're seeing Canadians that purchased during COVID at 1.59, 1.89, having to go to 3.59 to 3.99 to 4.09. So that's a big difference in your payment. And if you're just barely making ends meet with the low interest rate, not the high interest rate, you might struggle a little bit. So we might see, but we're also seeing Canadians that maybe want to sell their properties but aren't selling their properties because, like Paul talked about earlier, the previous segment, is that sales are down across the country. So people are just hanging on because they also don't want to give the house away.
Would that be per month?
What's that?
How much more payments per month would that be?
Well, it depends on your mortgage, but what we're seeing is most people's mortgages are going up anywhere between $100 to $300 a month. So nothing earth-shattering. So just because your rate goes from 159 to 389 doesn't mean your payment doubles, because a mortgage is amortized over 20, 25 years. And for those that cannot afford that $300-400, there's an option where they can refinance their mortgage and rejig their amortization. So if you're currently, because you bought it at 25 and now you're down to 20, if you've got the equity that's above 20%, you can jump that to 30-year amortization to keep that payment very similar to what it is today.
And Ron, to your question, I think we brought it up 2 or 3 shows ago, and I brought the article up. I don't know if it was a Globe and Mail. It might have been another publication. But they always, newsworthy. It's got a scare, right? And so the start of the article is like, some areas have tripled their delinquencies, and they're so underwater, but it's less than 1%.
Yeah.
And we're like, what? So in the backside of the article, they talk but it's still really, really, really low. But other places, the scare factor was they've tripled. And yeah, like Frank said, I think we will start seeing a couple more delinquencies as we get into the latter part of 2026 and maybe into the early part of 2027. But we're still super, super, super low when it comes to delinquencies in Canada.
Yeah. Thank you very much.
Thanks, Ron. Great question. Thanks for calling in.
And exactly to Paul's point, there's so much media in ways to consume media in the world now that the headline has to be shocking.
Sometimes I turn on the news and I turn it off and I feel terrible about myself. Like I'm just like, I'm living in a terrible world.
Yeah,
we're not living in a terrible world. We're living in
it's not as good as it used to be either.
I agree with that, right? But listen, glass half full. We're still in a wonderful world, and it's. At the same time, you watch some of this news, and a lot of it it's not true. It's false. I'm looking at some of these economists predicting certain things, and they're all over the map, and half of them don't even know what they're talking about, and half of them are not true. So You want the real news? Listen to our show every Saturday, and we'll tell you the real news.
Exactly.
Well, we don't. What we do is we look at all the data. You look at it on the real estate side. I look at it on the financial side, and I come up and listen. I could be wrong. There's no question, but I look at what the data tells me, and at the same time, I also talk to people. So when you're out there on the pavement and you're talking to people, you get the sense of what a 2-income family who is doing nothing wrong. They've got their incomes, and pre-COVID, they would have easily been able to put money aside for RSPs and put money for other things, where today they're saying, I'm struggling because I go to the grocery store and a bag of groceries is $100 when it used to be $40. And then we read statistics from Canada that says that food inflation is only up 3%. Well, I don't know, from $40 to $100. Yeah, not in my grocery store either. You used to get chicken breast for a certain price, and now they're double, triple the price. And then they tell you that it's only 3 or 4%, that food inflation's gone up. And I struggle with that number, just like I struggle with the job report.
Yeah, it's hard. Right now, there's no secret why sales are down, why it's tougher to live in today's economy. It is just tougher. Things are more expensive. And I know we have to go to break here, but when the numbers come out, it'll be. I know it's early. We usually see Jan, Feb numbers are always a little bit over the
soft.
Yeah. As we get to, I love to get into the May and June. It gives us more of an appetite of what's actually happening in the market. But we'll see what happens at the end of February with the numbers.
Have a question? Head over to realestateandmortgageshow.com or give us a call 521-TALK 521-8255. We will be right back.